Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's July 18th. This will be our chart lesson for the day, and this is going to wrap it up for the week. Remember, no chart lessons on Fridays, but kind of an interesting day today. We really had a couple of legs up. For the most part, the majority of the trading day was just kind of almost range bound. Um, we were trading. Here's the overnight highs, which we didn't trade much outside that except for a failure today. Uh, Mid-morning, and we bounced off the lows and looked like we were going to turn down at the highs again, only to break out and have a big rally right into the close. So most of these would have been aggressive type trades unless you recognize. I'll talk about this when we get to it. This is a very strong trend. It doesn't look like it, but you need to learn to spot these. When you start to see lots of little bars and lots of dojis mixed in, and the corrections are no more than a few ticks, where you just don't get any. I mean, this was the big, from around 10:40 into the 2 o'clock hour. This was the biggest correction, this two-legged swing here, and nowhere else do we really get any corrections until after 2 o'clock, any of any significance. So that is a strong trend, and when you see prices making very shallow pullbacks with lots of little dojis and stems on both sides, it doesn't look like it, but it's a very strong trend. It will just keep going. So if you find a key entry point, even if it's not what we usually like to see, like back at the EMA, you just about have to take it or you won't find any entries. And so I marked all these green, but if you recognize what's going on here, you can trade this. You can trade these up here. Every time you get a little correction back to a key entry point like this midline right here, or this is really a little spike in channel, and this kind of carried on, but really there's a two-tiered channel here. This was just a little temporary. I just left it on there because I had it going up. You can see it didn't really come back into play. It did one more time here, but really what the play is, let me just make this a different color so it's a little easier to see. We'll make this one brown. Might make it a little easier to understand. But you can see there's the brown channel is the two-tiered channel, but within that two-tiered channel there's a spike up and a little short-term channel, and we finally got a break. We got a break here in a new high, and then a two-legged correction back to the main trend line, and you can see then we played off of the midline and turned right off of that. I'm going to show you something else that's very interesting here. You hear me talk about these gaps and how they happen where trend lines are. Notice this gap that happened at around 10:15, 10:20, something like that. 10:22, 28 to be exact. Prices gapped right there. And little do you know that turned out to be where the trend channel line is, that you wouldn't know until several hours later, till after 2 o'clock, about 2:12, something like that. So maybe 2:14. So this happened around 10:22. So it basically foreshadows that trend channel line being there 4 hours ahead of time. I can't explain why that happens, but you can see it over and over, that where prices gap over these support and resistance areas. Some people call them thin areas, where the volume tends to be a little thin, so it moves quickly. I don't quite understand it, but anybody that tells you that market geometry is not real doesn't know what they're talking about. I look at this stuff every day and have for years and years, and it's very real. And these are things that I noticed over time that, seeing that at 10:14 doesn't tell you much other than the fact that, hey, somewhere across there's some important support or resistance. That's about all it tells you at that point. However, later on, when you go to place your trend channel line, you probably got it in the right place when you see it gap there. Just like trend lines, in midlines, if you see those gaps like that, they're probably in the right place. But anyway, you had a leg up a big correction and a second leg up. We got much more than a measured leg this afternoon rally, and I noticed still in the after hours we were rallying. Now we've sold off a little bit. But the market had a nice rally today. Again, most of the real serious move came after the last hour or so of trading. But if you look for a measured move, that would have given you a target only back up to the highs right across there. Maybe a little higher. That would have given you 22.91. So that would have at least kept you in the trade till you made a new high after the break of this two-tier channel here. But this thing kept going. So, and like I said, the only thing that you really have telling you this is strong is the way this trend is acting. Lots of little bars, lots of stems on both sides, very shallow corrections that don't, that maybe only go a tick or two or a point or so at most and then takes off again. Just remember that, because that's a strong trend, even though it doesn't look like it. It is. Just looking at that looks like a strong trend. But if you start looking at the bars and watching them, it doesn't look very strong because the moves don't go very far, but the corrections are very shallow as well, and it just keeps chopping higher and higher and higher. So you got a little bit of, you really got a little foreshadowing right here when it spiked up rather, and took off. And you got a two-legged correction, which a lot of times is the center of the pattern. So if you measure that and look for a measured move, that puts you way up here, a little higher, 29.94 or so. So that would have been my next target after this bigger leg here. So anyway, let's talk about the trades. 7 o'clock came right in here in this little correction, and you have a trend working up. You get a break, first entry, pull back. I would have liked it better if it broke lower, but that's still a second entry, a lower high when it broke higher right there. And you actually get a little pullback here. I don't know if I would have entered that. The only way I would have entered there was when it broke lower and then turned and went up and broke out the other side. I would have wanted to wait on it to back up to maybe the original spot there. And if it did that and you could get in, then you could enter here. And I'll mark it green based under those criteria. I wouldn't have a problem entering here because you got enough room to get out. But here you're getting a little iffy, so you'd have to get back in here at the original place. It would have worked either way, but you don't know that ahead of time, and it's just too risky. But of course you get a break, a new high, and now you're coming down. You get a break right here and a move to a new low. No real setup there, but you got this trend line coming up, so you wouldn't want to go short right there. There is a lower high right here, but it's just, again, there's not a good setup there. You just kind of get congestion. But then when it drops down here and hits that trend line, that's where you want to enter. You want to be looking for a long down here, not a short right in here. Nice signal bar. Quick, easy move. Ride that right back up to the highs again. And then you just kind of start chopping around. You do come back to the trend line again right here. On a bigger picture, that's two legs, but you don't have a very good signal bar, at least on my chart. If you had a good signal bar here, I wouldn't have a problem with you going long there. But notice what happens. You quickly come back and get another second entry. Again, I don't like that signal bar. It's too neutral, but this one is very bullish. So I don't have a problem just putting a buy stop right there. But if you wanted to, you could let it break higher and drop that limit order back one tick above that bar and see if you could get filled. I don't know if you would have got filled on that or not. It's possible, but rather than risk it and miss a good trade, I just put my buy stop right there. And of course, it takes off, and you run up here and you make a new high and then a first entry and then a second entry. That's not a very good signal bar. It's small though. It's only about 3 ticks. It is a second entry, and if you drew your trend line off these highs right here and drug it over, it's turning up right there. What you might do is wait on this bar. If it breaks above it too, then drop a limit order either right at the high or 1 tick back, and just see if you could get filled on that one. It's a little risky right into that high. I'm not crazy about it, but it is a second entry. It is off the key entry point. You get another pullback right here, but that's it's just a first entry, too close to the highs, and it looks like it probably would have worked, but it doesn't take long before this thing's going lower. But notice your new high, you get a break, you get a double top, and then you get a second entry long. It fails. That's not a very good signal bar, and I don't know if you really should want to look for shorts because the channel's still in play, but the trend line is way back here, so you may take that one. It is a failed second entry long. It is right at the um, EMA, so and we're expecting prices to probably come back to here. So if it breaks lower, it's probably going to at least come back to here. It actually turns and goes much lower, but notice that we do get two measured legs down, and then it chops up, and you could count this as a new high. So first entry, second entry, and that's two measured legs. And when that one fails, when it breaks lower, you may take that one down because it does confirm that key entry point there. That's your third touch. That's the better place to enter short because here the market's really still in an uptrend. This is probably going to trap people, and the longs are probably going to have to exit. And you can see them how quickly this drops. All those longs had to run for the door right there and exit, and that's why that rockets down like that. You get another turn down right through here, but I wouldn't enter any of these. You've been away from the EMA too long. They're getting more risky. I do like this very bottom bounce only because that's the overnight low right there, and you can see that we bounced off of it to the tick. Look how far we are away from the EMA. That's a relatively bullish bar. There's a good chance we're at least coming back to the EMA here, and even then, there's still a good ways back to just the trend line right there. And so, and you might catch the bottom of an important low of the day, which guess what? It turns out to be a very important low for the day. So that may be worth risking. It's a small bar too. It's like 4 ticks or something. I mean, I like that setup a lot, to be honest with you. It is trying to pick bottoms. I mean, look right here. It looks similar to that. The only difference is this is bouncing off the overnight lows where we've bounced several times before. And so you're probably going to get a bounce there. It could always turn and break lower one more time and then turn up. Or it could always keep going down for a while, but most of the time that's going to be a good entry. And if you catch this, that is a heck of that's a nice trade right there. So catch the very low of the day and runners. So anyway, this thing takes off. It jumps up into a little spiking channel. I'd still draw my trend line off those lows. And at this point, your highs were right here. Actually, you didn't get those highs until it spiked up here and started going. Then you could find those highs. But anyway, you could find this low right here, and you just needed to know where to drag it up to, basically. And at this point, I drug it up to here, but when we started going higher, you have to say, well, maybe that's a midline, and let me go to the next one. Of course, there was that gap we talked about. And but you still want to play this little spiking channel here. And I mean, from here to here, that's your first turn back, and there is a failed second entry short here. It doesn't quite get back to the trend line till here, and then you got a little double top. I wouldn't want to go long there, but suddenly you get a first entry, second entry, and you're back to the EMA. Your first break of that little spiking channel. I like going long there. You may not could have got in that because it gapped again right there and took off. So you may not have been able to get in that one. I'd still drop my limit order in there and hope that it comes back and fills me. And there's a little trap here that traps people to the short side. Notice you get a first entry and then you get a second entry and it fails instantly and turns down. I don't think I'd want to go short there. It is still away from the EMA, so that's a possibility. It's a double test. I mean, there's reasons to like that one. This was just a very strong trend, and this spike and channel had played out, so you may take that one. And I mean, you could almost argue for it to be red. I'm gonna leave it green because originally I didn't even want to mark it, but you got plenty of room back to the EMA and the trend line. Well, actually, you don't have plenty of room back to the EMA, but you do the trend line. And that's why I really didn't like it, because it could hit that EMA and bounce again, just like it did here. But it would have been a good trade, but I like going long there. It's 2 legs back, basically. Nice bullish bar right off your trend line, confirming it. I like going long there. And you don't know that it's going to take off like this, but guess what? You could have got in this trade and you would have caught a runner, and you could have ridden this all the way into the 2 o'clock hour and actually kept on. Once we made this high here off this high and that far away from the EMA, that's the place to exit. I mean, don't try to, I mean, you could have almost got it if you'd have just exited right there. Once it turned out, once it made the measured move to the other side of the trend channel, and exited 1 tick, just started moving your stop up. And when you would have got all but maybe 4 or 5 ticks of that, and that's as good as it gets. I mean, if you can get within 2 or 3 points of the high on a move like that, you're doing good. But when you can get within a point of it, you've done real well. So, but anyway, that's a great trade. You get a little, notice you got a little short-term trend line. It may be hard to see the real light trend line working up through there. It pulls back here and bounces off that. Plus you got the this original trend from the spiking channel. Even though that's played out, that trend line's still there, and so you got to kind of have both of those in the background. So you may take that one, especially if you recognize that this is starting to look like a strong trend. And then again up here, every time it comes back to that trend line, you know, technically you could buy that. It's a little risky, especially if you don't have a lot of experience, but I mean, when you see a trend like that, you just don't want to be buying way up here when when you get this far, especially when it's bouncing off that midline. Eventually it's going to probably go to the other side. So especially when it's that strong. And that got you in the 2 o'clock hour. There was another second entry long down here near the original trend line, but it's it's almost 230 there. So I wouldn't take a trade that late. But anyway, again, the majority of the day was just kind of a flat. I mean, it had an upward bias, and I mean, it looks almost like a range early on. And all of a sudden, right here around 1 o'clock, this thing takes off. Looks like we've taken most of that after hour stuff back already. But look at it, it's back inside this trend line, and it's played off that trend line a couple of times again already. So anyway, I'm gonna wrap it up. There's not much else to say about today. What looked like was going to just be another boring day almost. Again, most all your trades were before 1 o'clock anyway. You really need to understand these kind of trends here. Or this afternoon was basically a wash. Even though that's a big fast trend up, most people can't recognize that and would have a hard time trading that. Especially if you're new. If you've been watching my videos a while, I talk about these a lot. Every time we see them, I talk about them. So you might, if you've been around a while, you probably understand that. But if you haven't, that's probably too difficult for you to trade, and it's frustrating because you just keep watching it going higher and higher, and you keep thinking, we got to get a correction, but this thing goes all the way to the other side before you get a correction. But that's the way those strong trends do. So be aware of that. I'm going to wrap it up. Hope everybody has had a great week, and hope you have a good weekend. We'll be back again Monday to start again. I'm done for today. I'm done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.